What if I told you that one man holds the world record that nobody wants? In the year 2000, as the dot-com bubble burst, a single individual lost more money than any human being in history. $70 billion, gar, in months. His company's market cap collapsed by 99%, from $200 billion to $2 billion. He went from being richer than Bill Gates to financial ruin. Most people would have disappeared forever, retired to an island somewhere, given up. But Masayoshi Son isn't most people. Today, SoftBank, the company he built from 2 apple crates in the Tokyo apartment, controls a technology empire worth hundreds of billions. It owns the chip architecture powering virtually every smartphone on Earth. It made the greatest venture capital investment in history, and is now leading a $500 billion project to build the artificial intelligence infrastructure of the future. So what exactly is SoftBank? And how did one man's obsession with tomorrow create one of the most fascinating and controversial companies in the world? Welcome to the story of the man who lost $70 billion and came back to change everything. To understand SoftBank, you must first understand the man behind it. Masayoshi Son was born in 1957 in Tosu, Japan, to ethnic Korean parents. As part of the Zemesi Korean minority, he faced discrimination from an early age. This experience would shape his entire worldview, an obsession with proving himself, with being number one, with refusing to accept the limits others placed on him. At age 16, Son moved to California to attend high school and eventually the University of California, Berkeley. He arrived with almost nothing but an insatiable hunger. While his classmates were partying, Son was studying. He would later claim he slept only 3 hours a night, spending every waking moment learning about computers and microchips. By age 19, he had invented a multilingual electronic translator. He sold it to but Son wasn't satisfied. In 1981, at age 24, he returned to Japan and founded SoftBank. The name itself revealed his ambition, Software Bank. He would be the bank for the software revolution. He started with 1 million yen, about $7,000, and 2 apple crates that served as his desk. He was so determined to stay alert that he worked standing up. For 13 years, Son built SoftBank into Japan's largest software distributor and publisher. He launched computer magazines, organized trade shows, and aggressively expanded. By 1994, SoftBank went public on the Osaka Securities Exchange. The foundation was set. But software distribution was never the end game. Son had his eyes on something much bigger. In 1996, he made a $3.3 billion investment in a young internet company called Yahoo. This would establish the blueprint for everything that followed, identify transformative technology trends before others, invest aggressively, and hold for the long term. Son became known for his extreme persistence. When Japan's telecommunications ministry denied his application for a mobile license, he reportedly threatened to set himself on fire inside their building. When asked about this later, he simply replied, "Yes, I threatened to set myself on fire, but I didn't bring any petrol." That combination of audacity, vision, and calculated risk-taking would soon face its ultimate test. The year was 2000. The dot-com bubble had reached its peak, and Masayoshi Son was briefly the richest person in the world. Then everything collapsed. SoftBank stock price plummeted 99%. Son personally lost $70 billion, a record that still stands today. The company operated at a $1 billion annual loss for years. Most investors would have been destroyed. Son saw opportunity. In the wreckage of the internet bust, he met a struggling English teacher from China named Jack Ma. Ma had been rejected by over 30 venture capitalists. His e-commerce website, Alibaba, had no business plan, no revenue model, and no clear path to profitability. The meeting lasted 10 minutes. Son didn't ask for spreadsheets. There weren't any. Instead, he looked into Jack Ma's eyes. Years later, Son would explain his decision with a peculiar phrase. "I could smell her." He had the same smell we have. He's a big animal. On pure intuition, Son invested $20 million into Alibaba. His advisors were horrified. The world thought he had lost his mind, along with his fortune. 14 years later, Alibaba went public on the New York Stock Exchange. It was the largest IPO in history. That $20 million investment was worth over $60 billion. At its peak in 2018, it reached nearly $132 billion. 3,000 times return, the greatest venture capital trade ever made. This single investment didn't just save SoftBank, it transformed it. Son had proven his thesis. Bet on visionary founders, bet on transformative technology, and that big. Very big. The I would fund everything that came next. And what came next would be even more ambitious and far more controversial. In 2017, Masayoshi Son did something unprecedented. He raised $100 billion for a single investment fund. To put that in perspective, the entire U.S. venture capital industry invested about $80 billion that same year. SoftBank's Vision Fund was larger than the rest of the world combined. The money came from sovereign wealth funds. Saudi Arabia's Public Investment Fund contributed $45 billion. Abu Dhabi's Mubadala added $15 billion. Apple, Foxconn, and Larry Ellison's family office joined. The message was clear. SoftBank wasn't just investing in companies. It was reshaping entire industries. Some strategy was called Blitz. Call massive amounts of capital into startups to achieve market dominance before competitors could react. Winner takes all. First mover growth at all costs. The approach produced some spectacular successes. Coupe, the South Korean e-commerce giant, delivered enormous returns. DoorDash and Uber became publicly traded giants. Dozens of portfolio companies achieved unicorn status, but it also created a monster. In 2017, Son met Adam Neumann, the charismatic founder of WeWork. Neumann had a vision to revolutionize office space, to create a world where people didn't just work, they belonged to a community. At least, that's how he pitched it. Son saw the next Alibaba. Over the next 2 years, SoftBank poured more than $10 billion into WeWork, pushing its valuation to an astounding $47 billion. Neumann was given virtually unlimited capital and minimal oversight. He leased buildings to extravagant parties and expanded globally at a reckless pace. Then came the IPO attempt in August 2019. WeWork's one filing revealed the truth. Massive operating losses, questionable governance practices, and a business model that was essentially a real estate company pretending to be a tech company. Adam Neumann had leased buildings from himself. He had trademarked the word "we" and charged the company nearly $6 million to use it. The company's own disclosures read like a cautionary tale. The IPO collapsed. WeWork's valuation crashed from $47 billion to $8 billion. Neumann was forced out, and SoftBank was left holding the bag. Over $14 billion in losses. Son's response was revealing. I made a mistake, he admitted. I created a monster. But he didn't retreat. Instead, he lost Vision Fund 2 in 2019. This time, with $40 billion of SoftBank's own money. The strategy continued, just slightly more cautious. The Vision Fund's track record remains mixed. Some investments have delivered strong returns. Others have collapsed entirely. Greensill Capital, Katera, OneWare. The list of failures is long, but so is the list of successes. As of 2024, Vision Fund 1 has recovered to an internal rate of return of approximately 12%. For CERN, the math is simple. One Alibaba pays for 100 WeWorks, and he's always looking for the next Alibaba. Chapter 4, the RM bet, and the AI Future 11, 30-14-30. While the Vision Fund made headlines for its dramatic wins and losses, Son was quietly making what might be his most important bet of all. In July 2016, SoftBank acquired ARM Holdings for $31 billion. ARM doesn't manufacture chips. Instead, it designs the architecture, the fundamental blueprints that power the processors in virtually every smartphone on Earth. Apple, Samsung, Qualcomm, they all license ARM's technology. At the time, many analysts questioned the price. ARM was profitable but growing slowly. The acquisition loaded SoftBank with debt. But Son saw something others didn't. He saw the Internet of Things. He saw a world where billions of devices would need efficient, low-power processors. And he saw artificial intelligence coming. In 2020, SoftBank agreed to sell ARM to NVIDIA for $40 billion. But regulators worldwide blocked the deal, concerned about one company controlling both chip design and chip manufacturer. The acquisition failed, so Son pivoted. In September 2023, ARM went public on the NASDAQ. The IPO was a blockbuster. ARM's stock price surged, adding $38 billion to its market cap in a single day. SoftBank still owned 90% of the company, meaning Son made more from that one trading session than he had lost on WeWork. But this was just the beginning. In January 2025, standing alongside President Donald Trump, OpenAI CEO Sam Altman, and Oracle Chairman Larry Ellison, Son announced the Stargate project. Man, a $500 billion investment in artificial intelligence infrastructure across the United States. The project aims to build massive data centers, 10 gigawatts of computing power, equivalent to 10 nuclear reactors. It promises to create 100,000 jobs, and it positions SoftBank at the center of the AI revolution. Stargate represents everything Son believes: transformative technology, massive scale, and a bet on a future that others are too cautious to make. The project has its critics. Elon Musk publicly questioned whether the funding actually exists, but construction has already begun in Texas. For Son, ARM and Stargate are two sides of the same coin. ARM provides the chip architecture that will power AI devices. Stargate provides the infrastructure that will train and run AI models. Together, they position SoftBank to profit from the entire AI stack, from the data center to the smartphone in your pocket. So what is SoftBank, really? It's not a telecom company. Though it owns one of Japan's largest mobile carriers, it's not a venture capital firm. Though it operates the largest tech investment funds in history, it's not a semiconductor company. Though it controls the most important chip architecture on Earth, SoftBank is something else entirely. It's the expression of one man's 300-year vision. In 2010, Masayoshi Son announced his next 30-year vision with a striking premise. His most important job was to design the DNA of a company that would last at least 300 years. He envisioned a decentralized ecosystem of autonomous companies constantly evolving, constantly adapting, collaborating, and competing within a web of strategic synergies. SoftBank, in Son's conception, is a time machine company. It doesn't invest in what is. It invests in what will be. It lost $70 billion betting on the internet too early, then made $60 billion betting on Chinese e-commerce when everyone else was running away. It poured billions into WeWork and watched it collapse, then made it all back and more on a chip company most people had never heard of. The critics call Son a gambler, a speculator, a man who throws money at charismatic founders without proper due diligence. They're not entirely wrong. The vision fund's failures are real. The losses are measured in billions. But the supporters, and there are many, see something else. They see a man with the courage to bet on the future when others are paralyzed by fear. They see an investor who understands that transformative returns require transformative risks. They see someone who truly believes that technology can solve humanity's greatest challenges. In a 2017 interview, Son was asked about his investment philosophy. His answer was characteristically ambitious. I'm not investing in companies. I'm investing in the future. I'm not a venture capitalist. I'm a time traveler. Whether SoftBank ultimately succeeds or fails may not be known for decades. The Vision Fund's final returns won't be clear for years. The Stargate project is just beginning. Some say AI-driven growth is still in its early stages. But one thing is certain, Masayoshi Son will keep betting. He will keep looking for the next Alibaba, the next transformative technology, the next founder with that special smell. Because for Son, the game isn't about winning every hand. It's about staying at the table long enough for the big bets to pay off. $70 billion in losses couldn't stop him. WeWork couldn't stop him. The skeptics and the critics haven't stopped him. SoftBank isn't just a company, it's a philosophy. A belief that the future's always worth betting on, no matter how much you've lost in the past. And as artificial intelligence reshapes our world in ways we can barely imagine, Masayoshi Son intends to be right at the center of it, making the biggest bets, taking the biggest risks, and proving that sometimes losing everything is just the beginning.